Hey, welcome back. It's Jason Walter here. In today's video, I'm going to share my housing market forecast for 2021. So I'm going to give you all my real estate market predictions for home prices, housing inventory, mortgage interest rates, and much, much more. And lots of research went into making this video, so I greatly appreciate it if you hit the like button. Thank you so much for doing that, and let's go ahead and dive right into the video. For those of you who follow the channel, you know that I normally don't make housing market predictions or speculate on the channel. However, I thought it'd be fun to make this video for you. Plus, it'll be very interesting to look back at the end of this year to see if these housing market predictions become reality. First of all, these housing market predictions are dependent on a couple factors. And number one, and that is if mortgage interest rates don't increase beyond 3.75%. In my opinion, if mortgage interest rates were to increase above 3.75%, this may cool off our red-hot housing market. This is because rates dipped below to a record low of 2.7% earlier this year. So I believe that a 1% increase of rates could cause a negative impact on our housing market. And number two, my housing forecast is only valid as long as housing inventory does not skyrocket beyond what home buyers can absorb. However, I do believe as the economy is opening up and vaccine distribution is becoming more widespread, then I do believe more people will be more inclined to list their houses, and more on that later. And lastly, I'll say that if mortgage interest rates were to skyrocket and if housing inventory was also to skyrocket as well, we may be in for a housing market correction. And in case you didn't know, no one knows with absolute certainty what will happen to a real estate market this year, and I am no exception. I always tell people that my crystal ball broke a long time ago and it's held together with duct tape. And plus, I'm just some guy on YouTube. With that said though, here are my housing market predictions for 2021. Number one, and this is more people have the ability to work at home right now. And because of this, this is going to continue to shape our real estate market. For example, I would expect more people to leave more expensive areas to more affordable areas such as Austin, Texas, Boise, Idaho, and Sacramento, California, to name a few. And these buyers will seek larger houses with office space. I'm seeing this in Sacramento, California, where I live and work as a real estate agent, because we're having a lot of people here move from more expensive areas like the Bay Area to Sacramento to take advantage of a lower cost of living. This is a win-win for these folks because oftentimes their housing payment goes down, yet instead of living in a one-bedroom apartment, now they can have a large home and potentially a swimming pool. And home builders would love to capitalize on this migration from cities, and construction has increased somewhat, but more on that later. My second housing market forecast is that housing inventory will increase this year. If you follow the channel, you know that housing inventory is at a record low right now. This is due to many factors that I went over in my previous video. If you missed that video, I'll leave a link up here and a link in the description below. One of the reasons why I feel that housing inventory will increase this year is due to increased vaccine distribution. For example, some homeowners are not comfortable having strangers walk through their houses during a pandemic. However, as more and more people get the vaccine, I believe more people will be more comfortable getting their houses listed for sale. In addition, I believe that housing inventory will increase as more and more homeowners exit the mortgage loan forbearance. However, as I mentioned in my previous video, those who are currently in a mortgage loan forbearance, meaning they don't have to pay their mortgage payment for a set period of time, they have very little incentive to move if they don't have to make their mortgage payment. Let's discuss the timing of forbearance exits though, so we can have a more clear picture of when housing inventory could increase from that. As you may know, the CARES Act was passed in late March last year, and this allowed homeowners who had a federally backed mortgage to stop paying their mortgage for up to 1 year. So the earliest that we would have 1-year expirations of mortgage loan forbearance would have been the end of March this year, right? Well, not so fast because this was extended last month. Homeowners with a federally backed mortgage with an FHA, VA, USDA loan, or a loan backed by Fannie Mae or Freddie Mac can now do up to an 18-month forbearance. Therefore, the earliest that an 18-month forbearance plan would expire is at the end of August 2021. However, mortgage loan forbearances didn't peak until May 2020. Therefore, the peak of exits of an 18-month forbearance plan won't be until October or November this year. And of course, it's very hard to predict what these homeowners will do once they exit their forbearance plan. A portion of those people will sell their houses, while others will stay in their houses and pay off all their missed payments through a repayment plan or a payment deferral, for example. I won't go over all the options for homeowners who are exiting their forbearance plan, but I did make a video about that. I'll leave a link up here, as well as a link in the description below. In addition, for those who are still experiencing a financial hardship and they do not have enough equity in their houses to sell, they may get foreclosed on once the foreclosure moratoriums expire. However, given that home prices are near record highs on average in the US, most people do have enough equity in their houses to sell. I would also expect housing inventory to increase from brand new home developments, but that's not without some challenges, so let's discuss. As I mentioned in my previous video, home builders have been hampered with skyrocketing building costs as well as delays in getting materials. That has caused home builders to not ramp up construction as much as we need. For example, according to the US Census Bureau, instead of housing starts increasing this year, the exact opposite has been happening. Housing starts actually decreased 10% so far this year, and they also decreased on a year-over-year basis by 9%. However, I would expect that home builders should be ramping up their production right now as winter is ending and as home buyer demand is very strong. Time will tell though, and stay tuned on the channel for that. My third housing market forecast is that mortgage interest rates should remain historically low. The Fed announced that they will keep the federal funds rate at or near 0% for years, and they will only increase the rate once we've reached full employment. Obviously, we're very far away from full employment right now because our current unemployment rate is around 6%. That's obviously down from our peak of around 14.7% in April last year, which is obviously a good sign, but we're still well above pre-pandemic levels of around 3.5%. However, the 10-year US Treasury yield has skyrocketed recently, and that yield is tied loosely to mortgage interest rates. For example, if the US Treasury yield continues to increase, this may cause mortgage interest rates to increase as well. However, just because a US Treasury yield increases, this does not necessarily mean that mortgage rates will increase as well. I mention this because the US Treasury yield has been increasing since August last year, but mortgage interest rates decreased through December last year. Stay tuned on the channel for that because mortgage interest rates have been increasing greatly so far this year. Rates are approaching 3.4% for an average for a 30-year fixed rate mortgage, and that's up from a record low of 2.7% that was set in January this year. My fourth housing market prediction has to do with home prices, and I hate to say it, but the way our housing market is today with historically low interest rates, work-at-home arrangements that allow many people to work remotely, more or less wherever there's Wi-Fi, plus very low housing inventory levels, then I foresee that we're going to be seeing more home price records being broken this year. However, if interest rates skyrocket and if housing inventory also skyrockets, then all these real estate market predictions will be thrown out the window. So I'd love to hear your thoughts about this. What do you think about my housing market forecast? And what are yours? Please leave me a comment below. If you enjoyed watching this video, please hit the like button. I greatly appreciate that. And also consider subscribing if you haven't done so already. I post videos about how this pandemic is affecting our housing market, and I love making these videos for you. So I hope you're getting a lot of value out of them. Also, you can follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome day and look forward to seeing you on the next video.